Yo, what's good, guys? Welcome back to another video. Today, this video is a little bit different. I'm gonna go in order of how to do the ICT silver bullet, but it's going to be in like a different form. I'm gonna do step by step per video. So today we're gonna touch upon liquidity, and then tomorrow would be market structure shift. The day after will be fair value gap, and then the fourth day will be like how to handle like emotion, where to put your stop loss, this and that during the trade. But today is just liquidity, and I'm gonna teach you guys how to trade off of liquidity and show you guys what it means. I'm just gonna tell you guys what it means. And let's get started. So liquidity simply means the highest point or lowest point in the market of where money used to lie. Now, it's not always the highest and lowest point. Liquidity points are everywhere in the market. It's wherever there was a huge move projecting from the opposite to the opposite direction. So the best way for me to show you guys is to, actually, the best way for me to explain it is to just show you guys. So for example, let's say the market is going bearish. Let's say we're going down, right? Liquidity would simply be up top here. Liquidity would be right here. This is liquidity, and down here would be liquidity as well. So this is called, if we can get our text tool, this is called buy side liquidity. I can type here. This is called buy side liquidity, and this is called sell side liquidity. Okay, so this is sell side liquidity, this is buy side liquidity, right? Everywhere in the market has liquidity. This is liquidity, this is liquidity, this is liquidity, this is liquidity, so on and so forth. It's like stairs, like steps, right? Now, the only time we actually really care about liquidity is when we're trading based off of the absolute highest or the absolute lowest. So when it comes for the ICT, the ICT silver bullet strategy, you're always going to do the absolute highest point of liquidity in that time range. So for example, if this is a 10 a.m. window, if this is a 10 a.m. window and this is to 11 a.m. window, for example, you're going to take the point right before the highest point before 10 a.m. right, and just drag it out. We're going to take the lowest point before 10 a.m., which would look something like this. That's a wonky ass graph, but forget about it. We're going to the lowest point before 10 a.m. and basically that's liquidity right there. Liquidity means money used to be there. And what investors did, let's say on the bottom here, this is where they bought, the institutions, the people, the market makers, everything, everyone combined. This is where people bought, and this is up here is where people sold. Okay, so up here is people sold, and bro, what is this writing, bro? Sold, and this is where people bought. Okay, people bought here and sold here. Now, it is really small when you go in the smaller time frames. There is like smaller movement. It doesn't always mean people sold at the top. Like for example, this could be a 5-minute graph, right? And this would be liquidity, and this would be liquidity on the 5-minute, right? This is the 5-minute, and liquidity would be on the bottom and the top. But on the daily, if you go on like a higher time frame, the graph would look completely different. It would look like this. It would look something like this and like this. You're trading 5 minutes inside of this hour, or inside of this day. So that's why it looks nothing like it when you go on the higher time frame. And I'll show you guys this like right now. Let me just clear everything off the board. let's go on the daily time frame. I'm going to show you guys what liquidity looks like on the actual graph. So liquidity points are right over here. This is buy side, right? This is buy side. This is buy side. And this is sell side over here. This over here is sell side. So on and so forth. It's just the highest points before a big move. This could be considered liquidity up here. This is also liquidity, but there was a break of structure. This candle over here broke above it, so it wouldn't really classify it as like a super high point because this point behind it was already higher. Okay, it was already higher, so this would just be the point of liquidity. This is a point of liquidity over here as well. And you guys get the point. You guys get the point, right? Down here is liquidity. There's liquidity everywhere in the market. So that's why, to make it simple in the ICT silver bullet, we only choose the highest and lowest point of the 5 minutes. So you see how different this looks? Now in the 5 minutes, we would only point out the highest over here and the lowest, which is over here. A swing low, swing high, and a swing low. Simple as that. Swing high, swing low. That's the high, that's the low. Boom. Just like that. Now, when you want to enter, you can't really enter with just liquidity on itself. You need different confluences. You need to have an actual strategy. You can't just enter based off liquidity because no one really knows where liquidity is until it forms. So let's say price was like this, right? Some people would say, oh, okay, well, liquidity was already made up here. Even though it might be true, you gotta wait till price does something. This isn't really liquidity because you're not trading in that time frame yet. For example, if this was an 8 a.m. candle, right, and 9:30 is yet to come, you're not gonna sit there and market this out first. You're gonna wait for the actual liquidity before 10 a.m. to come. Then you'd mark it out. If this is still the highest point before 10 a.m., then this would be a valid swing point, it's a valid liquidity point, and you'd mark this out. If the 9 a.m. candle fails to make a higher high, okay, that's all it is. So if we play price on, right over here gets taken out right away. Okay, even though this is 12 p.m., I'm just acting like it would be 8 a.m. But just to put it into perspective for you guys, right? So you see, this is where it becomes liquidity. This is how you guys know exactly why it's liquidity. So I will talk about this tomorrow, but I'm gonna give a little bit of a sneak peek on why this would be liquidity. This is called liquidity, and we know that is because there was a market structure shift that happened right after liquidity was swept. So this was technically liquidity for a while, but this got swept and created a market structure shift. This shifted over here. Zoom in closer for you guys. This candle over here, this broke underneath it. That's how we know that this is now a downwards trend, meaning this was the highest point it could reach, and it couldn't have gone higher later, or until later, right? If you play price on, you could see it keeps making lower low, lower high, lower low, lower high, consolidations, right? Let's say, boom, now it's 9:30, now it's 10 a.m. You want to look for a trade, you're going to look for the low point, the lowest point, which is this. This is the lowest point because, again, after making a low, it failed to make a lower low, meaning this was the new structure. This was a market structure right here that got broken by this candle. Zoom in again. This line got broken by this candle over here. That's why it's called a market structure shift, and now this down here is called liquidity. This is now also called liquidity, but technically it's only this one because this was the absolute lowest one before your current trade or current time frame, which is 10 a.m. or 9:30. Okay. Price kept making a high. It made a higher high, higher low, higher high. Then it made a lower low. Then if we keep playing price on, we can see it consolidates and makes a higher high and a higher low. Stops right there. Okay. Basically, all it is, liquidity is simple. Everyone should know what liquidity is in the market, especially like even if you're doing crypto, stocks, indices, forex, bonds, whatever you're doing, futures, whatever you're doing, there's always liquidity in the markets. This does not only apply to forex. It doesn't apply to the ICT strategy. It applies to everything. Not only the ICT silver bullet. Okay. That's basically it. That's all liquidity is today, guys. Tomorrow I'm going to teach you guys how to spot market structure shifts and how to use them in your fair value gap. And every video I'll be putting things together. So I'll recap liquidity tomorrow with the market structure shift. Then the next day fair value gap with liquidity with market structure shift. Fourth day everything together, and basically it. Thank you guys so much for watching. I hope you guys learned something today. I was probably a little bit too quick for you guys, but hopefully you guys can just rewind and see everything again. You can replay the video, try to understand it, to your best ability. But that's basically it. Thank you guys so much for watching.